today's discussion, we would be focusing more on the overall present situation of Indian stock market. If you have been tracking the market in the last 7 weeks, right? In the last 7 weeks, market was completely in a bull run. It was a continuously profits, and there has been many instances where majority of the companies have given a very good return. Now, yesterday, if you observe, we have seen a sharp decline in the market. And now discussing on the decline, we have to see what are the main reasons for that decline. First and foremost factor, December, in the month of December, during that too a Christmas holidays season, FIIs normally close their positions, right? FII normally close their positions. So that could be one of the trigger which would have impacted the overall stock market to decline. And yes, yesterday it was a big hit, close to 1.4% decline. Apart from the FII, we also see that the COVID cases in India, that was specifically in Kerala, we saw some rise, right? So that is also a negative factor for the market. So that could also have been one of the impact for the market decline. And third, yes, crude oil wise, we saw a small rise in the crude oil prices. And earlier also we have been discussing in the Indian markets, right? In the Indian stock market, if you look at the global factors, there are no negative situations as such. Even we have not seen any decline in majority of the global markets, except for China. Majority of the global markets have closed positively, right? And even in India, we do not have major problems related to the earnings of the companies or any conflict related. There is nothing except for COVID cases, which we have to observe. COVID is something which stock market has already factored in earlier. So now, depending upon the number of cases or depending upon the number of depending upon the emergency, it may be factored, right? It may be factored. So what I would like to say is this decline cannot be construed as a bearish market, right? Cannot be construed as a bearish market, but yes, we have to be little bit cautious, right? We have to be little bit cautious because yesterday, if you observe the sharp decline or the fall of Sensex, we have observed after 1 p.m. Any decline which happens post half session or post 1 p.m., the same kind of a weakness may be carry forwarded for the next day, right? So today we will be observing if it is a little weak, chances are that it may be weak, right? If it is becoming positive or if it is again reviving, that is wonderful and it is good for all of us. And if it is still showing weakness, we will discuss what are those things we have to be careful about. So let me tell you a quick 3 pointers for everyone. First thing, any new positions or any new entries you have had in the recent times, have a strict stop loss. If your stop loss is 6%, if your stop loss is 8%, and if your stop loss is triggering move out, you again get a re-entry, you can enter. Second, sir, I'm already in some wonderful stocks which has already given me some 30%, 40%. I'm sitting at 25, 30% returns. Those kind of a stocks, you need not hit a hard button of sell, rather keep a trailing stop loss, which means whenever it declines or whenever it touches your support levels, partially exit, and in weakness, if it is getting weaker, partially exit and have a trailing stop loss for the existing positions. Third and very important factor, this is the time wherein you have to research about or watch out for strong companies. In a bear market or in a weak market, when a company is showing strength or when a company is in sideways or not falling aggressively with respect to the benchmark, those are the candidates which will become multi-baggers when the bull run starts. It's not the end of the bull run. there are a lot of positive factors which are supporting the Indian market. And apart from that, pre-elections, 5 months, 4 months before, we saw market historically going up many instances, right? So this is a perfect time where, as I discussed on the third pointer, watch out for strong companies in a weak market, or watch out for stocks which are just in sideways when the overall benchmark is also falling. That is the perfect time to hunt for strong candidates, and these will move during a bull run. So now what we will do, let me quickly share my screen and let's discuss what are the couple of actionables which we need to remember as stock market investors, right? As stock market investors. So first of all, as I have just now discussed, more than 96% of the super performance stocks emerged from bear markets and general market corrections. So whoever feel market is not good, I'm not getting good results out of it, or I'll be out of it, right? No, this is the time wherein you should be looking at more companies rather than adding into a weak company, rather than adding into a company where it is continuously falling. Observe which candidates are strong, right? Which candidates are strong. And yes, how do you do that? Check whether the stock is exhibiting strength. For example, yesterday, if you look at it, right? Warren Beverages Limited, which is one of the beverage company, FMCG company, which have been discussing from couple of months in our discussions, right? Even there are many members who have been in the stock for more than a year in our community, right? When in strength, we have to always average up a stock. Even though yesterday it had a decline in the overall market, this stock has picked up strength, right? Study the fundamentals. See the companies which are exhibiting strength. And those companies, we need to be there, right? Titan Limited, yes, yesterday it has shown some good strength. Apar Industries, right? Many such companies which you are tracking, keep a hold of the stocks which are exhibiting strength. Second, if a stock holding on to it, or the stock is not falling, or it is in a sideways zone, even if the entire broader market is bearish, those kind of a positions are also good to be there. And companies which has strength in the fundamentals, quarterly they have performed well on the numbers wise, on the quarterly data they have done good, and because of the overall market it is just in the flat mode, these will be the emerging candidates for the next bull run. Second, look at HH and HL formation, right? So whenever you need to understand the trend of a stock, right? Whenever you need to understand a trend of the stock, normally this is an uptrend, right? This is an uptrend. So in this uptrend, this is your high, this point is your higher high, and this point is your next higher high, and this point is your next higher high. Similarly, this is your here. Read this as, right? Yeah, read this as higher low. This is higher low. So if you see here, yes, this is a low, and this is another higher low, and this is another higher low, right? This kind of an uptrend pattern is what we need to focus on. There are few members, sir, as the market is correcting or as the market is falling, should I enter into the stocks which have corrected more, right? No. If a company is very strong and it is correcting and you want to enter, wait for it to consolidate or wait for it to revive. Adding a stock during a fall is not a good thing, right? Is not a good thing. Okay, rather enter into strength than weakness. If I'm taking a new position, I will enter stronger stocks or I will enter into strength rather than accumulating weaker companies. Okay. Third, volume. When there is good volume also coming into the stock, means more number of buyers, that is where we need to be there. And yes, relative strength. Relative strength wise, an ideal entry, a stock should be performing better than your Nifty, right? So relative strength means a RS positive stock. Just load your indicator relative strength, and if the stock is performing better than your Nifty, always enter into RS positive stocks. That's why the earlier point which I told you, a stock which is declining or the stock in weakness, when it is falling, if you are trying to add, that's not the ideal entry. And one criteria or one barrier which I want to tell you is make use of exponential moving average, EMA, right? Both for your short term and for your long term. Short term, any holding for less than 1 year, you look at your daily time frame, right? Daily time frame. And here, once you have loaded your exponential moving average, right? Let me show you on the screen, right? Let me show you on the screen. Let's go to trading view. Any stock which is below its EMA 200, right? Sir, I wanted to enter into a stock because I feel it's a good opportunity, and as the stock has fallen considerably for a greater extent, I want to accumulate that stock. And if the stock is below EMA 200, EMA 200 is the minimum Lakshman Rekha for us. You will not be there in a company which is way below its EMA 200, right? For example, right now, if you see Nifty 50 is there on the screen. So I go to indicators and I go to technicals and I just select exponential moving average or moving average exponential. You just enter EMA here. Okay. Now I've selected 200. So I've been looking at last 200 days closing price of Nifty and I'm drawing an average line, right? So this blue line, whatever you see, is the EMA 200. If any stock or if any index wherein this candles, if you see, if it is below your EMA, this line, if it is below the EMA 200, you don't enter, because this line, EMA 200, is the Lakshman Rekha for you, right? Is the Lakshman Rekha for you. Similarly, right? Similarly, so right now, Nifty has fallen. So for my short-term positions, how I should be more careful? You change the setting to EMA 21, which means we are looking at EMA or the closing price of the stock for the last 21 days strength. And if you see EMA 21 for Nifty 50 index, somewhere around, let me draw the horizontal line. Yes. So if you see here, 20,700 is the EMA 21 for Nifty 50. So from the present levels, if Nifty falls below 20,700 or Nifty falls below EMA 21, it can be leading to more weakness, right? The immediate support for Nifty, which is its 21,000 levels, right? The immediate support is at 21,000 levels, which is this blue line, which has been the support for almost this entire days, right? In December. And after this, if you consider this as your first support, this line is your second support, which is EMA 21. Similarly, any stock which is falling below EMA 21, you should be cautious, or even you should slowly reduce your position, right? Reduce your position. For example, sir, I've been into IRFC, right? I've been into RVNL, or I have already had my position into CDSL, right? If you see here, yes, IRFC right now, I'm looking at a daily time frame, right? We are discussing on a short-term daily time frame. EMA 21 and EMA 200 are both on daily, right? So if you see EMA 21, 84 rupees for IRFC is the EMA 21. Anything below 84 can be something weak for IRFC. Similarly, if you look at CDSL or even BSC, right? I'm just giving you a couple of examples here, right? If you see CDSL, yes, it had a very good move almost from October to till date. In the last 2 months, it has been above EMA 21. Yesterday, right now, it is touching. It is not completely below EMA 21, it has touched EMA 21. If it is falling below EMA 21 for someone who are holding for short term, right, or swing trading, this could be one of the trigger for you to be more cautious, right? To be more cautious. So what did we discuss? In daily time frame, EMA 200 is like a Lakshman Rekha. We don't enter into stocks which are below this EMA 200. And if the stock is completely below its EMA 21, for the short term stocks related, you will be more cautious. Either you can reduce your position or slowly you can get out of the company. Now, long term, sir, I'm holding this company with a time frame of 3 years, 5 years, like that. Or I know this is just a short term reaction, and just for the benefit of everyone, right? Just for the benefit of everyone, and even just take as a homework, just go back to TradingView or even any resource whatever you're following. Small cap index, if you see, in the month of December, last 3 years, in the same period, December 20, 21, 22, like that, right? In the same period, last 3 years, small cap index has corrected by almost 2 to 3%. And this is a trend, this is a pattern, right? This is a pattern. So the short-term knee-jerk reactions will always be there in the market. As an informed investor, we just adjust our positions, but not to be completely bearish on the market or not to be worried. Now, whoever are holding for long term, let's say the same company, right? The same company, CDSL. So this stock, as long as the investors increase in the Indian stock market, whenever they buy, whenever they sell, CDSL will get a pie of it, right? They always get the depository charges because we have only 2 depositories, CDSL, Central Depository Services Limited, NSDL, National Services Depository Limited. It's just a duopoly. Chances of another depository coming is very, very less. So as the number of transactions improve, this is a beneficial company. And many of the insurance policies are not yet digitalized. Once it is getting digitalized, they get an income because they are the depositories. Their property documents, right? Land property related, there are many opportunities wherein the company can benefit. Sir, I will not look at daily. My intention is not to hold this company for short term. This is a long term where I accumulate for long term. Those kind of a positions move to weekly, right? I move to weekly, and in weekly, change the setting to 30, which means last 30 weeks, right? Last 30 weeks, I'm looking at the strength of the stock. So all your long-term companies wherein it is falling below your EMA 30, that is where you have to be careful. And just see how wonderful it works. CDSL, if it's someone for a long-term company, after the COVID impact, from almost May 20, it has never given an exit till almost your April 22. And if you see April 22, it has been below EMA 30. And yes, during this entire period is a tough time for majority of the investors who have been in CDSL. Yeah, either you can get rid of it, come out of it, and whenever it gives you a re-entry, you can again enter. And if you see here, yes, again on June 2023, it has given an entry. And almost from June 23 to till date, it is above EMA 30. Whenever if this is triggering, whenever the candle or the stock is below your EMA 30, then you reduce your position or you get away from it, right? Or you get away from it. Let's say, sir, I have been holding Polycab India Limited, right? I have been holding KA Industries, right? There is no trigger yet. If it is a long-term company, EMA 30, you can follow, right? So as I have discussed, for short term, ensure any entry you are entering also, the stock is above your EMA 200. Don't enter into stocks which are below EMA 200, which are trading below EMA 200 line. If your existing position is below EMA 21, be more cautious. Yeah. And for the weekly, follow your EMA 30. This is for your long-term stocks. And lastly, very important, right? Very important. your ideal entries into the stock, right? Ideal entries, or sir, I wanted to build up a very strong portfolio. This is the time wherein you keep observing on the stocks which are exhibiting strength. Prepare a watch list, right? Prepare a watch list of companies which are quality companies. Fundamentally, they are good. The last quarterly results have been decent and they are exhibiting strength. Means in a falling market, either they exhibit strength, they are increasing, or at least they are in a consolidation phase, right? So just let me tell you, as yesterday we had a small decline in the overall market related, right? There has been a big fall in small cap, mid cap, and even on the large cap, or even in the Nifty 50, we had a 1.4% decline after half of the session, right? So today, if there is further weakness, we have to be more cautious. And as I've said, remember three things. First, any fresh positions, new entries have a strict stop loss. Strict means if it is touching 6 or 8 percentage below your purchase price, move out. You again get re-entries. Do not compound your losses. Two, the present positions which are already doing good in your portfolio, keep a trailing stop loss, right? As it is weaker or if it is falling below your EMA 21 like that, keep reducing your positions, right? Third, be in a watch out or prepare a watch list of stronger companies in this market. As I have shown you the data, 96% of the super performance stocks have arisen out of a bear market or a weak market, right? So if you do your watch list and if you keep tracking, when the next bull run starts, these are the stocks which will advance much higher. Okay. So I hope everyone loved this discussion, and let me know below which stocks you are tracking or what are the things or what are the actionables which you follow. Let me know below, right? Let me know below.